Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on trading with over 190k reputation points. In this video, I will be speaking about USDCAD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders to the COT data. So essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. So without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing and rejecting to the upside a quite strong historical level of previous monthly resistance, which is now turned support. Now, as the market is testing and rejecting to the upside this previous resistance turned support, there is definitely the possibility of seeing more bullish price action being created away from this level. We can also notice that if we look at the bigger picture, clearly, we have a market which is currently in a range. We have, in fact, the top of the range here acting as resistance, and at the same time, we have the bottom of the range here acting as support. Now, we can already see that in multiple occasions, the top of the range has already been acting as resistance, and at the same time, we have here the bottom of the range, which has been acting as support. Now, the last time that the market tested significantly one of the two levels was here at the bottom. In fact, we can notice that this test here didn't really go and test the high of the range. So the next logical step would be for this market to want to go and test the high of the range to go and check what kind of liquidity there is at the top here. And that is why, since it is also rejecting this intermediate level of previous resistance turned support, there is, in my opinion, a good probability that this market might want to go and test the high of the range, therefore create more bullish price action away from this level. Dropping down on the weekly time frame, what we can notice is that from a weekly standpoint as well, the structure is quite important. We have, in fact, here exactly at this level, previous weekly resistance, which is now turned support. From here, all these previous rejections to the downside were created. Then the market broke above the zone and all the previous resistance was turned support and has been acting as support already for the multiple times that the market tested this area and is currently creating this rejection to the upside away from this zone. We can also notice from a pattern standpoint that if we look closely, there is a massive impulse, and then all this is a corrective movement within the major impulse. This means that if we want to measure this correction, we have to take our Fibonacci from the low to the high of the impulse leg, and this shows us how we have a 0.618 Fibonacci retracement lining up exactly with this previous resistance turned support, therefore creating a confluence of support inside of this area. And when there's a confluence of support zone, there is an increased probability of getting institutional longing, which at that point could further increase the probabilities of a potential rejection to the upside away from this zone. Now, in a situation like this, let's go and see if we are already seeing that institutional longing for USDCAD. In order to do that, we have to check the commitment of traders. And we have to keep in mind that if we're looking at the data for the CAD, we are already looking at CAD USD because all currencies on the spot are traded against the USD. But since we want informations on USD CAD, we simply have to reverse everything. And what we can see here is that with the last reports, net positions have been decreased. We went from having minus 111k to minus 132k net positions, meaning that institutions are moving to the bearish side for the CAD. And if institutions are moving to the bearish side for the CAD, it means they're moving to the bullish side for USDCAD, therefore making it stronger. So USDCAD is getting stronger and longed by institutions. Let's keep that in mind and move back down on the daily chart. Now, from a daily perspective, I did speak about USDCAD just a few days ago after the market had created this W formation. I explained all the reasons for which from here we could expect first a correction and then the continuation to the upside. And in fact, that is exactly what the market gave us. And by the way, I will link in the description that previous analysis so you can go and check it out for more free education. But in a situation like this, what kind of structure the market has created. Now, by the way, before we continue with the analysis, if you still haven't, make sure that you go and join my free Telegram channel, which you find both on the screen and also linked in the description so you never miss new updates. Now, back to the analysis. Well, from a daily perspective, in a situation like this, clearly we have structure at this level. This is previous resistance turns support. If the market here will go and test this previous resistance turn support, at that point, there is an increased probability of getting institutional longing inside of this zone, since already institutions are longing USD-CAD by shorting the CAD, as we have already seen. Therefore, that would further increase the probabilities of a potential rejection to the upside away from this level. So if the market would correct to this area, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside away from this level. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire all-inclusive mentorship program. This is the most complete all-inclusive mentorship program. You will see here a complete presentation of everything included, which is essentially all my courses, including the programming course on automated algorithmic trading. You also have the possibility to gain access to one-on-one private mentoring, all included in the mentorship program, the trading station software with the Telegram signals notification, and also the COT data software, which is essentially the one that we just used in this analysis. So everything all for lifetime access. And if you continue to scroll down, you will see that you will have the possibility after the testimonials to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest at least to go and check it out at transparentfxtrading.com. You find the link also in the description, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, if you have any suggestions on any topics or pairs that you would like me to cover in the next videos, make sure to drop them in the comments below, and I will see you in my next video.